All right, so picture this. 1938, the Great Depression is still grinding America into dust. Banks are failing, farms are being foreclosed, and in the middle of all this economic chaos, a guy named Charles E. Schmidt Sr. decides, you know what? This is the perfect time to start selling tractor parts. Now, most people would call that insane, but Schmidt, he saw something nobody else did. See, while city folks were standing in bread lines, farmers were out there trying to keep their equipment running with baling wire and prayer. Tractors were breaking down left and right. And here's the thing, getting replacement parts in 1938 rural America was damn near impossible. You'd order a part from the manufacturer, wait 6 weeks, pay through the nose, and hope it was the right piece. Schmidt figured, why not cut out the middleman entirely? So he set up shop in the back of a small building in Minot, North Dakota. Actually, no, wait, records get a little messy here. Some sources say he started in Chicago, others say Minot. The company itself now claims it began in Chicago, Illinois, so we'll go with that. Chicago, 1938. Schmidt rented a tiny space, filled it with surplus tractor parts he'd bought cheap from manufacturers who were desperate to move inventory, and started printing catalogs. Not fancy catalogs, mind you. We're talking minographed sheets with hand-drawn part diagrams and prices listed in pencil because they kept changing. But here's what made it work. Schmidt promised something revolutionary for the time: fast delivery, honest prices, and parts that would actually fit your equipment. The business model was brutally simple. Buy surplus parts in bulk, store them in a warehouse, print a catalog, mail it to every farmer whose address you could get your hands on. When orders came in, ship them out the same day if possible. No salesmen, no storefronts, no overhead beyond rent and postage. Just parts, paper, and persistence. And it worked. Kind of. See, 1938 to 1941 was tough going. Real tough. Farmers had no money. Credit was non-existent. Schmidt was basically running on fumes, hoping each month he'd sell enough parts to pay the rent and buy more inventory. There were weeks where he'd open 3 orders, and 2 of them would be asking if they could pay in chickens or corn. But then, December 7th, 1941 happened, Pearl Harbor, and everything changed overnight. Suddenly, the United States government needed food. Massive amounts of food, to feed soldiers, to feed factory workers, to feed our allies overseas. And that meant American farms had to produce more than they'd ever produced before, which meant tractors had to run, which meant tractor parts became almost overnight a strategic wartime resource. Schmidt found himself sitting on a gold mine. He had inventory, he had supplier relationships, he had a distribution system, as crude as it was, that could get parts to farmers faster than anyone else. Orders started flooding in, not just from farmers now, but from defense contractors, from government agencies, from rural communities that had been told to increase production or else. The company grew fast, too fast almost. Schmidt hired clerks, warehouse workers, delivery drivers. He rented bigger spaces, expanded his catalog, added new product lines. By 1944, Tractor Supply Company, that's what he'd officially named it, was shipping parts to 48 states and turning a real profit for the first time. But here's where the story gets interesting, because Charles Schmidt wasn't content just selling parts. He'd spent enough time around farmers to understand something crucial. Farmers didn't just need parts, they needed everything. Fencing, work clothes, animal feed, hand tools, welding supplies, paint, lubricants, all the random essential stuff that kept a farm running. And they wanted to buy it all from one place, from someone they trusted without having to drive 3 towns over or wait for 6 different mail order shipments. So Schmidt started adding non-tractor items to his catalog, a few pages of work gloves and overalls, then some fencing supplies, then livestock equipment. By the end of World War II, the Tractor Supply catalog was 3 inches thick and sold everything from carburetor rebuild kits to chicken feeders. Post-war, most businesses expected a crash. All that wartime production money would dry up, demand would collapse, and we'd slide right back into Depression-era conditions. Except it didn't happen. Soldiers came home, the GI Bill put them on farms, mechanization kept accelerating, and tractor supply kept growing. By 1950, Schmidt was operating out of a warehouse complex, employing dozens of people and shipping thousands of orders per month. The catalog business model was humming along beautifully. But Schmidt was already thinking about the next evolution because he'd noticed something. Every time a farmer visited the warehouse to pick up an order, which happened more often than you'd think, they'd spend an extra hour walking around, asking questions, buying stuff they didn't know they needed until they saw it sitting on a shelf. There was something about physically seeing the products, touching them, talking to someone who understood farming that made people spend more money. And Schmidt realized we could do this intentionally. We could open stores. So here's the thing about opening retail stores in the 1950s. It was expensive, it was risky, and it meant completely changing how your business operated. Schmidt had built Tractor Supply on low overhead. No storefronts, minimal staff, everything running out of one central warehouse. Opening stores meant rent, utilities, sales staff, local inventory, and 100 other costs that could sink you fast if customers didn't show up. But Schmidt was convinced, and in 1952, he opened the first Tractor Supply retail location. Not in Chicago, not in some big city, in a small farming town. And here's where the historical record gets frustratingly vague. The company doesn't seem to have clear documentation of which exact store was first, or where it was located. What we do know is that Schmidt's strategy was to target small rural communities that were too small for major retailers, but big enough to support a farm supply store. The early stores were, let's call them rustic. Concrete floors, metal shelving, industrial lighting, everything displayed in a way that prioritized utility over aesthetics. You walked in and it smelled like motor oil and leather and feed grain. There were parts bins along one wall, racks of work clothing in the back, and a counter up front where someone who actually knew farming could answer your questions. And it worked. Not spectacularly at first, but steadily. Farmers liked having a physical place to go, especially when they needed something immediately and couldn't wait for mail order. Store managers became part of the community. They knew the local farmers by name, understood the regional crop cycles, could recommend products based on local conditions. Through the 1950s, Schmidt slowly, carefully expanded. One store here, another there, always in small towns, always with the same formula. By 1960, Tractor Supply had maybe a dozen retail locations, plus the still thriving mail-order business. Revenue was solid. Profits were decent. The company was stable. And then Charles Schmidt Sr. died. The company passed to his family, but here's the problem. Running a successful regional farm supply chain requires specific knowledge, specific instincts, and specific commitment to the rural customer base. Without Schmidt's driving vision, Tractor Supply kind of drifted through the 1960s. The stores kept operating, the catalog kept printing, but there was no aggressive expansion, no innovation, no response to changing market conditions. Meanwhile, competition was heating up. Regional farm co-ops were expanding, Sears Roebuck was pushing hard into rural markets with their own farm supply offerings, and bigger agricultural equipment dealers were starting to sell the same parts and supplies Tractor Supply had built their business on. The competitive advantage that Schmidt had created, fast service, good prices, knowledgeable staff, was eroding. By the early 1970s, Tractor Supply was struggling, not dying, but definitely stagnant. Revenues were flat, several stores had closed, the remaining locations were struggling. National Industries realized they'd made a mistake, but they didn't know how to fix it. They tried bringing in different management teams. They tried different strategies. Nothing worked. In 1982, National Industries sold Tractor Supply Company to another holding company at a significant loss. The new owners, to their credit, understood they needed to get back to basics. They promoted several longtime Tractor Supply employees into management positions, people who actually understood the farm supply business. They gave local store managers more autonomy. They backed off the aggressive modernization and let stores feel like farm stores again. It helped, a little. Tractor Supply stabilized in the mid-1980s, but they were still just a small regional chain of maybe 40 stores, operating in a handful of Midwestern states, fighting for survival against bigger competitors and agricultural cooperatives that had deeper pockets and better supplier relationships. And then in 1987, something happened that would completely transform the company. A group of investors led by a guy named Joe Sr bought Tractor Supply Company. Sr had a background in retail management, but more importantly, he understood rural customers. He'd grown up in a small farming community. He knew the culture. He knew what farmers wanted. But Sr also understood something that previous owners had missed. The agricultural economy was changing. Farming was consolidating. Fewer farms, larger operations, more mechanization. The traditional small family farm that Tractor Supply had always served was disappearing. If the company kept targeting only working farmers, they'd be chasing a shrinking customer base. So Sr made a bet, a controversial bet. He decided to shift Tractor Supply's focus away from hardcore agriculture towards what he called the rural lifestyle customer. People who lived in rural areas or small towns, who might have a few acres and some animals, who valued self-sufficiency and outdoor work, but who weren't necessarily full-time farmers. Hobby farmers, homesteaders, rural homeowners, people who needed work gloves and fencing and animal feed, but who also wanted pet supplies and outdoor power equipment and gardening tools.
So here's where Joe Sri's strategy gets really interesting. Because shifting from serving full-time farmers to serving rural lifestyle customers sounds simple, but it required rethinking everything about how Tractor Supply operated, and a lot of people inside the company thought it was a terrible idea. The hardcore farm supply employees, the old-timers who'd been with Tractor Supply since the Schmidt days, they were furious, betrayed even. We're a farm supply company. We serve farmers. If we start trying to be some kind of rural Walmart, we'll lose our identity, we'll lose our credibility, and we'll get crushed by actual Walmart when they inevitably move into rural markets. But Sr had done the math, and the math was brutal. In 1987, there were about 2.2 million farms in the United States. That number had been declining steadily for decades and showed no signs of stopping. Meanwhile, there were roughly 50 million people living in rural areas who weren't full-time farmers, but who still needed farm and ranch products. 50 million versus 2 million. The choice was obvious. So Sr started changing the product mix. He kept all the core agricultural supplies, fencing, livestock equipment, feed, parts, tools, but he added pet food, lawn and garden supplies, work and recreational clothing from brands like Carhartt and Wrangler, outdoor power equipment like lawnmowers and chainsaws, heating supplies, trailer parts, even things like bird feeders and wind chimes and home decor with rural themes. The stores got redesigned too. Still no frills, still utilitarian, but cleaner, better organized, more welcoming to customers who might be intimidated by a traditional farm supply warehouse. Sr wanted stores that felt comfortable for a suburban family buying chicken feed for their backyard coop while still serving the rancher who needed 3 tons of cattle pails and a trailer hitch. And here's the brilliant part. Sr realized that rural lifestyle customers spent more money per trip than traditional farmers. Farmers knew exactly what they needed, bought exactly that, and left. They were price sensitive, brand loyal, and resistant to impulse purchases. Rural lifestyle customers browsed. They discovered products they didn't know they needed. They bought gift items and seasonal merchandise and brand name clothing at full markup. The first test stores operating under this new model opened in late 1987 and early 1988, and within 6 months, Sr knew he'd been right. Revenue per square foot jumped 30%, profit margins improved, customer counts increased. The formula worked. So Sr went aggressive with expansion. In 1988, Tractor Supply opened 12 new stores. In 1989, 20 stores. In 1990, 30 stores. They pushed beyond their traditional Midwest base into the Southeast, into Texas, into the Mid-Atlantic. Every store followed the same format, 10,000 to 15,000 square feet in a small town or rural area, merchandise mix targeted at the rural lifestyle customer. The expansion required capital, lots of capital. Sr took Tractor Supply public in 1994, listing on NASDAQ. The IPO raised about $40 million, which immediately got plowed back into more store openings. Wall Street analysts were skeptical. Retail was a tough business. Rural retail was even tougher. And Tractor Supply's strategy of targeting small towns meant they'd never achieve the kind of scale that made investors excited. But Sr kept executing.
By 1995, Tractor Supply had almost 600 stores. By 2000, over 350. Store performance was remarkably consistent. New locations typically broke even within a year and became profitable within 2. The rural lifestyle concept was proving out across different regions, different climates, different local economies. Of course, it wasn't all smooth sailing. In the mid-1990s, Tractor Supply ran headfirst into competition from a company called Rural King. And this is where the rivalry gets interesting, because Rural King had a very different strategy. Rural King started in 1960, but they'd stayed focused on hardcore agriculture. Their stores were massive, 40,000 to 100,000 square feet, and stocked everything from tractors to truck beds to industrial welding equipment. They positioned themselves as the place serious farmers and contractors went for serious equipment at serious prices, and they were expanding aggressively through the Midwest, opening stores in many of the same small towns Tractor Supply was targeting. For a while, in the mid to late 90s, it looked like Rural King might crush Tractor Supply. Their stores were bigger, their selection deeper, their prices often lower because they bought in such huge volumes. Several Tractor Supply locations in Indiana and Illinois were getting hammered by nearby Rural King stores. Stock analysts started questioning whether Tractor Supply's smaller format stores could compete against Rural King's warehouse-style operations. But here's what the analysts missed. Rural King's huge stores required huge customer bases to support them. They worked great in towns of 20,000 or more, but they couldn't profitably operate in towns of 5 or 8,000. Tractor Supply's smaller format, lower overhead, and broader merchandise mix meant they could succeed in markets too small for Rural King. The two companies were actually targeting slightly different customer bases and slightly different geographic markets. Tractor Supply's management realized this and doubled down on their small-town strategy. Instead of trying to compete head-to-head with Rural King in larger markets, they focused on blanketing rural America with stores in small communities that couldn't support larger competitors. By 2005, Tractor Supply had over 600 stores in 40 states. They'd become the largest rural lifestyle retailer in America, not by beating competitors in direct competition, but by serving markets competitors couldn't profitably reach. But the real test was still coming, because in the early 2000s, Walmart started getting serious about rural expansion. And when Walmart moves into your market, you either adapt or you die.
All right, so when Walmart decides to target rural America, they don't mess around. In the early 2000s, Walmart was opening rural supercenters at a terrifying pace, sometimes 2 or 3 per week. These weren't just grocery stores. They were 150,000 square foot retail fortresses that sold everything from food to furniture to farm supplies. And they could undercut Tractor Supply on price for commodity items like pet food, work gloves, and basic hand tools, while also offering the convenience of one-stop shopping. Most retail analysts expected Tractor Supply to get destroyed. The prevailing wisdom was that specialty retail couldn't survive against Walmart's scale and pricing power. Regional chains across America were getting crushed. Why would Tractor Supply be any different? But Tractor Supply had something Walmart didn't: expertise. Walmart employees knew how to scan barcodes and direct you to aisle 12. Tractor Supply employees knew how to build a chicken coop, troubleshoot a trailer hitch, recommend the right fence wire for goat containment, and explain the difference between sweet feed and pelletized feed. That knowledge was worth something, enough that customers would pay a few dollars more to shop at a place where the staff actually understood their needs. Tractor Supply also had product selection that Walmart couldn't match. Sure, Walmart sold work gloves, but they carried 3 options. Tractor Supply carried 30. Walmart sold a generic dog food. Tractor Supply carried 12 brands formulated for specific breed sizes and dietary needs. Walmart had a few basic hand tools. Tractor Supply had an entire wall of specialty tools for farming, ranching, and rural construction work. The strategy became be the expert. Every Tractor Supply employee got trained on product knowledge. The company started hiring people with actual farming or ranching backgrounds. They partnered with manufacturers to stock exclusive products and specialized items that mass-market retailers wouldn't carry. And they leaned into the community aspects. Stores hosted workshops on chicken raising, beekeeping, welding. They sponsored local FFA chapters and 4-H clubs. They made themselves indispensable to rural communities in ways that went beyond just retail. It worked.
Through the 2000s, even as Walmart saturated rural America, Tractor Supply kept growing. Revenue went from $500 million in 2000 to over $2 billion by 2010. Store count doubled. Same-store sales increased year after year. Wall Street finally started paying attention. But growth created new challenges. The bigger Tractor Supply got, the harder it became to maintain that local, knowledgeable, community-focused culture. A company with 700 stores can still feel personal. A company with 1,400 stores starts feeling corporate. Store managers in 2012 weren't the grizzled farm equipment veterans of the 1980s. They were professional retail managers hired from other chains who'd been through a 2-week training program. Product selection started getting more standardized. The company implemented centralized planograms, detailed layouts of exactly what products should go on exactly which shelves in every store. Local managers lost the autonomy to stock regionally relevant items. A Tractor Supply in Montana had basically the same inventory as a Tractor Supply in Georgia, even though the agricultural needs were completely different. Some of the longtime employees started grumbling that Tractor Supply was becoming the thing they'd always feared, a generic rural Walmart, trying to serve everyone and actually serving no one particularly well. And there was some truth to that. The rural lifestyle strategy had been brilliant when Tractor Supply was smaller and more nimble. At massive scale, it created tension between hardcore agricultural customers who wanted serious equipment and knowledgeable service, and casual rural lifestyle customers who wanted convenience and low prices. Management tried to thread this needle by creating different store formats: smaller stores in tiny towns, medium stores in larger communities, and new neighborhood stores in suburban areas that targeted affluent customers who wanted the rural aesthetic without the actual farming. Some locations added drive-through pickup, others added extensive pet supply sections that rivaled dedicated pet stores. Then came 2020, and the pandemic changed everything. See, when COVID hit and lockdowns started, people flooded out of cities. Remote work became normal overnight. Suddenly, millions of urban and suburban dwellers started thinking, why are we paying ridiculous rent to live in a cramped apartment when we could buy land, have space, maybe raise some chickens? Tractor Supply's sales exploded. I mean, absolutely exploded. In the second quarter of 2020, comparable store sales increased 35%. People were buying chicken coops, fencing, garden supplies, work clothing, everything Tractor Supply sold. The company couldn't keep popular items in stock. Chickens became so popular that Tractor Supply started holding chicken days, where they'd bring in live baby chicks for sale, and people would line up at dawn to get them. Revenue for 2020 jumped 25% over 2019, then another 15% in 2021. The company that analysts had once thought might get crushed by Walmart was now posting growth numbers that made Wall Street drool. Stock price tripled. But here's the uncomfortable question that nobody wanted to ask in 2021. Was this sustainable? Were all these new pandemic-era rural lifestyle customers actually going to stay customers? Or once remote work ended and life returned to normal, would they drift back to their old shopping habits?
So here we are, 2025. And Tractor Supply Company is the largest rural lifestyle retailer in America by a huge margin. They've got over 2,000 stores across 49 states. Annual revenue is pushing $15 billion. They employ something like 50,000 people. By any conventional measure, they're a massive success. But let's talk about what success actually looks like at this scale. Because the Tractor Supply of today is unrecognizable compared to the Tractor Supply of 1938 or even 1987. The company is now traded on NASDAQ under the ticker symbol TSCO. Institutional investors own most of the stock. Quarterly earnings calls focus on metrics like comparable store sales growth, operating margin expansion, and return on invested capital. Store managers are judged on shrinkage rates, labor efficiency, and how well they execute corporate merchandising plans. Everything that can be measured gets measured. Everything that can be optimized gets optimized. And in a lot of ways, this is good. The supply chain is remarkably efficient. Products move from manufacturers to distribution centers to stores with minimal waste. Inventory management systems ensure high-demand items stay in stock. Employee training programs are standardized and effective. Stores are clean, well-lit, professionally run. But something has been lost. That sense of being a local farm supply store that really understands your community and your needs, that's harder to maintain when you're a $15 billion publicly traded corporation with fiduciary duties to shareholders. The old-timer who could eyeball your tractor and tell you exactly which part you needed has been replaced by a friendly but generic retail employee who can check the computer system and order parts for delivery. Now, is this bad? Not necessarily. It's just different. Tractor Supply today serves millions of customers efficiently and profitably. They provide jobs, pay taxes, support rural communities. They're doing what a successful modern retail corporation is supposed to do. But they're also facing new challenges that Charles Schmidt Sr. never had to think about. E-commerce is eating into retail across every category. Amazon can deliver farm supplies to your door in 2 days, often cheaper than Tractor Supply can sell them in stores. Rural customers are getting older on average, younger generations are leaving small towns for cities, and the customer base is aging out. Competition from dollar stores, home improvement chains, and online specialists is intensifying. The pandemic boom has faded. Revenue growth in 2023 and 2024 returned to more normal single-digit rates. Some of those new customers who discovered Tractor Supply during lockdown kept shopping there. Others drifted away once life normalized. Stock analysts worry about whether the rural lifestyle market has reached saturation, whether there are enough potential customers in underserved areas to support continued store expansion. And then there's the question of identity. What is Tractor Supply Company really? They're not a hardcore farm supply store anymore. Rural King and regional cooperatives serve that market better. They're not a general merchandise retailer. Walmart and Target do that more efficiently. They occupy this middle space serving rural lifestyle customers, which has been incredibly profitable, but also leaves them vulnerable to being squeezed from both sides. Management knows this. Their current strategy emphasizes expanding the product assortment to serve more customer needs, adding more pet supplies, more outdoor recreation items, more home and garden products. They're testing smaller format stores for suburban areas. They're investing heavily in e-commerce and curbside pickup. They're trying to become more than just a store. They want to become a complete rural lifestyle brand. Will it work? Hard to say. Retail is brutal. Companies that seemed invincible have collapsed within a few years of missing the next trend. Sears was once the most dominant retailer in America, with a farm supply business that dwarfed Tractor Supply. Now they barely exist. But here's what's remarkable about Tractor Supply's story. They've survived and adapted through massive changes in American agriculture, retail, and rural life. They've evolved from a mail-order tractor parts company during the Depression to a multi-billion-dollar rural lifestyle retail chain. They've outlasted countless competitors. They've navigated corporate ownership changes, strategic pivots, economic recessions, and paradigm shifts in how Americans shop. The company Charles Schmidt founded in 1938 to serve struggling farmers now serves hobby homesteaders, suburban pet owners, and rural lifestyle enthusiasts. That's not a failure of mission. That's successful adaptation to changing reality. Schmidt built a business around understanding what rural customers needed and delivering it efficiently. Modern Tractor Supply is doing exactly the same thing, just for a different definition of rural customer in a different era. And maybe that's the real lesson here. Companies that survive long-term aren't the ones that cling stubbornly to their original identity. They're the ones that understand their core value proposition and adapt it to changing circumstances. Tractor Supply's core value was never selling tractor parts. It was serving rural America with products and knowledge they couldn't easily get elsewhere. They've stayed true to that mission for 87 years, even as everything else changed around them. So when you drive past a Tractor Supply store in some small town, maybe take a second to think about what you're actually looking at. That's not just a retail building. That's the evolution of rural American commerce embodied in corrugated metal and concrete. It's a story that started with one guy selling tractor parts from a catalog during the Depression and became a $15 billion rural lifestyle retail chain. And somewhere in there, if you look close enough, you can still see the ghost of that original vision, serving the people who make rural America work.